Good afternoon. Today is Tuesday, March 7th. My name is Derrick Oldensmith, and I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm out of Snap, I'm out of Pins, I'm out of Meta. Paid me pretty decently. Back into Shop, back into Microsoft. I got on Microsoft yesterday at one point, got back in. Started a new position on this PDD short. Alright, CrowdStrike. Solid numbers on this CrowdStrike here after hours. Catch a nice bid, and that's after it's had a good run into it too. They beat on EPS, 47 cents versus an estimate of 43 cents. They beat on revenue. Most importantly here, they're guiding kind of above estimates to a little bit of a degree for revenue, and pretty decent guide on EPS. So stock is trading up on it. I got this S, which is moving as a secondary here. Just caught a pretty big 40-50 cent bid off that. So good stuff. All right, let's jump into the heart of our meeting. It was a bearish day today. A bearish day on Wall Street, brought on by Uncle Jerome Powell. Back to sink the market again. We've seen it happen before. We are not surprised that it happened again. SPYs at the end of the day here, the S&P closed down 1.5%. NASDAQ closed down 1.2%, a little bit of relative strength there. The IWM also down around 1.2% or so. Intraday chart of the SPY is up right now. You can see we had a pretty flattish open. Everybody was waiting for Powell to speak. Some comments dropped pretty much immediately. They were all hawkish. They were all really hawkish. That I couldn't read anything dovish through that at all. Fed funds rate really increased the percentage of a 50 basis point hike again. Not sure where that settled, but at one point we were looking at I think a 50-50 potential for a 50 basis point hike versus a 25 basis point hike for March, the March meeting, and then an 80% probability of 50 basis point hike in May. I am still leaning towards the camp of 25 basis point hikes from here. I still think that that's what they've more officially forecasted, and that's what they're going to continue to do. It's more about how many, in my mind at least, and I could certainly be wrong. The market's telling me I'm wrong right now with an 80% probability of a 50 basis point hike in May. But I'm still in the 25 basis point camp, but I'm still also in the camp, and I've been saying this for a while, that I think that there's going to be more of these 25 basis point hikes than we originally expected, and that we're going to stay at that higher rate for longer than the market expected. And it's only been recently that the market has been starting to catch up to us as far as thought process. And now, after today, I'm almost wondering if the market hasn't just caught up to ProDesk as far as thought process for rate hikes, but that they have also begun to overshoot my thought process a little bit. I really don't think we're going back to 50 basis point hikes. I could be wrong, but I don't think I've been wrong a single time yet on my expectations for what the number is going to increase to. And again, it's not because I'm a genius. It's because they pretty much always tell us ahead of time. But the market certainly didn't like it. The market certainly did not like the prospect of a higher probability of going back to 50 basis point hikes and everything else. I mean, look, we said this. There's another thing, if I'm giving shout-outs to the team here. We said back at the end of last year, when everyone was like, oh, look at this, how great it is that inflation's coming back down. We predicted that inflation was going to be coming down, but we also said at the end of last year that this is not going to be a straight down move to 2%. Like a trend, you're going to have your higher highs and higher lows. I think Powell used the term bumpy today, that it's kind of a bumpy road. And for sure, it's a bumpy road. There's going to be, fits and starts of inflation that kind of come in on the way down, and it's going to take a while, maybe even years, to get fully down to 2%. So the fact that we've seen little resurgences is no surprise to any of us. The fact that they're going to have to do potentially higher for longer is no surprise for us. Though, for my mind, I still think that going back to 50 basis point hikes anywhere in 23 is not going to be happening. It's just going to be a matter of how many 25 basis point hikes we get. But we'll see if the market proves us wrong. From a technical perspective, again, market got crushed today when Powell began to speak at 10 a.m. That negative Maribozu high was really important for the rest of today's trading session. It'll continue to be important, so let's take note of this price. It's about 403.30, 403.32. It's going to be a really important price going forward. SPYs are particularly weak. There are times when the Qs and the IWM were given bounces where it looked like it might even want to negate that. The Qs got pretty close here on 2 bounces, 2 retests of 300 that got held as resistance, with the high being 329 of the 10 a.m. number for the Qs. They were never able to fully recapture it. I actually thought that they were going for it here at this 12.15 bounce. This 12.15 bounce kind of took me by surprise, to be honest. We had developed this intraday support. It's noon. This is usually not when we get good price action. Out of nowhere, we're getting this kind of rip higher, breaking this wedge a little bit to the upside, retesting 300. I thought maybe we were actually going to do it there. But it also failed, and we grinded down, and the Qs more or less closed at lows. Same thing with the IWM. Made a real attempt here at 10:35 or so to lead the market up. It led the market bounce, which we always think is a good sign, and attempted to negate that 10 a.m. high, but also failed to do so. Put in a higher low, even though it was a decent bounce, and also closed really weak. Let's take a look at some daily charts for our indices to see if the picture here has changed at all. So for sure, this trading session in Powell takes the wind out of the short-term bulls. We were just starting to look pretty good with the false breakdown that we had last week, below the 200-day, below the support that I had been looking at, where we snapped up, closed at highs, gave a phenomenal day 2. Yesterday was this potential day 3, but we didn't want to chase that day 3 because it's a day 3. Shooting star. Off that shooting star, what did we say this morning? We said this morning that the market could probably use some further rest. That today was also going to probably be a less is more type of day, but that Powell could move the market. And it started that way, right? We started with a really tight 30 minutes, sticking within this range, staying above. I really wanted the market, for big time bulls, you really wanted us to be able to close above like 404, let alone 400. We failed to close above either of those kind of key spots today. So we didn't get the upper level rest that the market bulls really wanted. We crashed all the way down. Again, that takes the wind out of the sails of the bulls. I know that Pat was making an argument that we have gone back to bearish technicals here. I would still make the argument personally that we're a little bit more neutral. We're certainly not bullish anymore after today. That we pulled back way too far of this rally, in my opinion, and lost too many support levels off of Powell's hawkish comments today. But I wouldn't say we're outright bearish yet either. We're still above this kind of more major support zone around this 393.50. If we get a close below 393.50 at any point, then I would say that we're back to at least short time frame bearish, and then the big time frame probably becomes a little bit more neutral. On the really big time frame, what you want right now, if you're a bull, is that you finally got this bigger picture, higher high and higher low from the December low and February high. You want those big picture higher highs and higher lows to continue. So you want this low here from the false breakdown in the beginning of March to be a big picture higher high versus the higher low versus the December low, and then working our way back up to this 415, 420 area. So if you lose this low, then what? You're kind of starting to build out a wedge again a little bit. The big time frame bulls would be a little bit more lost, and they would also be a little bit more neutral. So we're not quite in that full penalty box yet for our big time frame bulls. They still have an opportunity to pull this out, but if they lose this low on a closing basis, they're out the door. And again, I think our neutral time frame here is also out the door for bulls. So not looking great on the SPYs. Qs maybe a little bit better actually for the Qs. I think that real momentum bulls needed this market to kind of stay above 398.73, which they failed to do so. But really, we just kind of closed in that equilibrium area. So there's still a chance for these NASDAQ bulls, and the Qs have kind of shown a lot of leadership the last 2 days. Yesterday, we discussed in the morning meeting, it was really the mega cap stocks yesterday that were able to hold this market up, and Apple's upgrade from Goldman was a big part of that. There was some good flow into those names. Qs here back into this equilibrium area are not totally lost. They lose 295, and that becomes, I think, a little bit more of a problem. But they're pretty close to it, and the SPYs are in a difficult spot. And then the IWM, which is where your real relative weakness was, again, this was the big kind of discussion in the morning meeting today, was that I felt yesterday was a much more bearish day than the SPYs or Qs showed, because these mega cap stocks that are such a large percentage of these indices from a market cap perspective held in so well. If you want to get a real idea of what the market itself actually looks like, then sorry, one of my positions just moved. If you want to get a real idea of what the market really looked like yesterday, I think you look at the IWM. The IWM yesterday was atrocious. Today it was not great either. And the Russell here, which was the first to break out, is now the first to start to test this downside support from this rangy action that we've been in over the course of the last couple of weeks. So 186 on a closing basis is a key spot. If the IWM loses 186, it becomes a problem. It potentially can bring down the other indices as well, just because we know that the Russell is such a big leader. So very quickly here, Jerome Powell brought us from a market that was looking pretty bullish after that false breakdown to a market that is looking neutral, maybe even bearish, depending upon your perspective and which index that you're looking at. So that's our big picture for the market. Again, I think we did really well again today. I feel like I say that every day, which is a good thing. I feel like I say that every day. We recognize the importance of this candle. I don't think anyone was really fighting anything, to the long side in any of these spots. Maybe we could have done a little bit better to the short side after this, but I know, Josh called out some really good shorts, and we still had some pretty good trades. Delta was a big focus off the open. This was one of my ideas. Delta got upgraded. 39 was a level, so I was looking at Delta through 39. I think this trade would have been phenomenal if the market wasn't a disaster today, and it was still pretty decent. So trade through 39 there. I got a little bit of a jump start. I bought my stock in the 38.90s, but regardless, sounds like a bunch of us were in this together. Fantastic momentum move off that upgrade up to 39.80 or so. Again, the market heaviness pulled back much deeper than I think this thing otherwise would have or should have. Never really gave me too much of an opportunity to trail because this first pullback was so deep. I eventually got stopped out here when this low broke, which technically is a cheat of my third rule. But I wanted to protect some of my profits there, so I'm fine with it. And I wouldn't have kept it overnight even if I didn't get shaken out here because I didn't have a big enough of a profit cushion. And then my other kind of decent little day trade winner today was this WW. WW on earnings, and they announced that they bought some company. I don't know who they bought. I actually missed it, and then I think I saw an option flow hit or something, and I typed it up, and I was like, oh wow, this thing gapped up really big into an interesting area. The chart looks good. I've traded the stock in the past. I know it's got a decent short flow. This name has the potential to squeeze. By the time I was looking at it, it was around 10 a.m. Let me see when I first executed. Yeah, I think I first bought stock at 9.50 around here. And I was adding into here, and yeah, the ADMA was catching up on this bull flag consolidation type of pattern here. I know the stock has the potential for a short squeeze. There was this tight little inside 5 here at 10.10 that was key. Then we cleared up the intraday resistance and began to have a great rally. So this was, probably my best trade of the day today. Yet I was also frustrated because I don't know, somebody did a market sale here at 11:15 when I had very briefly stepped away from my desk, and I had my stop below the low of this inside 5 because of some ads that I had taken. So I have my stop at $5. The inside 5 low is $5.01. I have my stop at $5. And you can see here on the chart, and again, I didn't watch the actual tape. What's going on with WeWork? Anybody got news on WeWork, which is popping for some reason right now? Sorry, I gotta just manage this super quick here. Pat, you there? Anybody? All right. Yeah, so super frustrating about this WW is, I was training really well. I had a pretty aggressive game plan with it and a tight stop. And I was super happy that my tight stop didn't trigger here as I got heavier. So I had, a size that I was really happy with at this point. Trades breaking out, it's working for me. It looked like someone did some sort of market downtick or something where my stop was at $5. I know the chart here says a low was $4.98, but I got $5.01 as my stop. That only happens when there's through prints from my experience. Again, I didn't actually see it, but it looks like some sort of through print triggered my stop. I don't think it actually ticked down to that price. I got stopped at half of my position or so, maybe even a little bit more than half my position at $5.01. And then, 2 minutes later, I sit back down, the stock's at $5.20. What I always recommend to people when that happens, if you get stopped out on like a through print type of situation, is just take your stock back right away. It's really unfortunate. It happens pretty rarely, but it can happen. So if I was looking at this thing and I have a stop at 5 and I get price improved on my stop because of a through print and I can take my stock back at $5.03, 4 cents, 5 cents, I'm just going to do that and kind of whatever it costs me the difference, but at least I get my stock back. By the time I sat back down, the stock was trading in the low 520s. It's one thing to buy back my stock at $5.03 and lose 2 cents difference plus some commissions. It's something completely different to chase higher by 20 cents in a $5 name to get your stock back and take on all that risk. It really messed up my game plan, which totally sucks because I probably would have had stock through the entirety of this move up to $7, and instead, because I lost more than half my position, I ended up kind of just liquidating what I had into these highs. So I still made some money on it, but that through print today was really costly and somewhat frustrating, and hasn't happened to me like that in a while. But they got me pretty good. They got me pretty good on it. And oh, I didn't scroll down. Thanks, and I'm just seeing that now. Interesting uptick off of that. I still think the stock is not blowing at these prices. I had done pretty big ads twice in we just above $1 now. My stop loss on that's 0. Anyway, so that kind of sums up my day, I think, pretty well. I made a few bucks. I got back involved in Shopify, keeping a little bit of that overnight, kind of on this dip. So I'm keeping that, and that's it. That's all I got. So I'm happy to raise any questions. Yeah, I don't know why my chat wasn't scrolling down on its own before. Thanks, Josh. There was a lot of support down there. Anyway, now that I see that my chat wasn't scrolling down, I'm happy to answer any questions. I was like, oh, this is weird. Don't say anything. Nick agrees with me. Good. Nick's a smart guy. I like when he agrees with me. From DJ is the first question I'm seeing here. Do you still take off half a 1-to-1 even if your risk is extremely tight? For example, suppose you enter an RDR on a thick, slow stock like SoFi with a risk of only 3 cents. You're still taking it at 1-to-1. I ask because it seems like at that point there would be such a large percentage of the transaction that it might not even be worth covering the 1-to-1. Or maybe there's a minimum cent risk you're willing to take on each trade. Yeah, so I don't mind risking 3 cents in a trade, but I have what I call a 9 cent rule on profit taking. My 9 cent rule is if my 1-to-1 kick is less than 9 cents, because my risk is less than 9 cents, my first offer will be 9 cents in the money. So in your example here, If you bought, 5,000 shares of SoFi because there's only 3 cents risk, I'm not offering 2,500 shares, 3 cents in the money. I'd be offering that 2,500 shares 9 cents in the money, because that makes it worthwhile. Another similar but different question that I get a lot is, do you calculate in transaction fees when you are, judging risk reward? And the answer to that is generally no, I do not. The exception to that, when I gotta keep it in mind, is on a trade where I've got like 5 cents or less worth of risk. Because let's just say that, obviously it depends what your commission rate is, and if you took liquidity or added liquidity, let's just assume it's a penny on each side. I always like to assume, numbers that are probably a little bit relatively high, but let's just assume it's a penny on both sides. If you've got 3 cents of risk, then all of a sudden that's actually 5 cents of risk. And on a percentage basis, that actually matters. Whereas if you were risking $1 and then you add on commissions, it's $1.02 on a percentage basis. That really doesn't matter. So again, that's kind of how I do it. I have a 9-cent rule for if my risk on my 1-to-1 is less than 10 cents. Or less than 9 cents, I always want to make sure that my 1-to-1 kick is at least 9 cents in money to make it worthwhile. Mark thinks I would think institutions might be rebalancing a tad after today's message tomorrow, for example, selling. March does have a big OPEX, so that might be a factor, keeping things in check for the near term. Yeah, I do think that this March OPEX is a factor for this market right now. But I don't know. I think institutions, if what you're saying is right, then I think they're just behind on things, because they've been behind on things in terms of thinking. It was just at the end of December that these institutions were thinking we were going to get 2 rate cuts by the end of 2023, or early January. Maybe they were thinking that, which made no sense to me. And now I think it's starting to swing to the other side with these 50 basis point increases. So yeah, we saw a pretty decent sell-off today, but I don't think we saw, honestly, that big of a sell-off. If we're really going back to 50 basis point increases, I actually think the sell-off should have been much bigger than this. But time will tell. Time will tell. It's all speculation. From Kyle. So I traded DAL today along with many others in here, and I really like the setup. Looking back, I noticed UAL had a bit of a better daily setup in my opinion, and off the open UAL broke 53 and had only 13 cents of risk and ended up giving better follow through. Would this name have been valid to trade off the open in sympathy to the DAL upgrade, or do you always want to trade the name that has the catalyst? And then I see Noah here saying that UAL also had an upgrade, if I'm not mistaken. I didn't see the UAL upgrade. The only thing I've seen today was someone in the VTF, I don't know who, maybe it was you, Noah, said that UAL also got upgraded at some point after the market opened. So I didn't actually see any UAL upgrade in my pre-market research. It may have been there, it may not. Generally, I prefer to be involved in the name that's in play. And yeah, whatever. That's my straight answer to you. I thought that the DAL chart was very clean at this 39 level, and is the name that I saw that got upgraded. So that's going to be the one that I want to go after. If UAL got upgraded, I don't think that the level's quite as clean with UAL. I'm not exactly sure which price you would want to buy off that daily chart. You're saying 13 cents risk. But you're talking about 53 versus lows. I don't see 53 as important for the stock. So the thing that I really liked about DAL, and the reason why I made my list, wasn't just that it got upgraded, but it was also how clean that chart was. The UAL chart here is bullish, but I don't see it as being as clean. I guess I can see this 53 as being a little bit of a level with this gap up failure that happened here on January 18th, but the last 2 days in a row, it traded above that 53, and it was a little bit sloppy, kind of in that area. You can see that here. And it opened above 53, ticked below it, and came back up. I actually think that this is a much more difficult trade. I know it's less risk if you're able to execute it perfectly, but I think that this is a much more difficult trade. DAL, opens below, which is exactly what you want, so you can buy through the level on the way up. You know, whatever, gives a quick down tick, fine, it was a little bit extended, and then trades through the level. I guess you could make the argument that this was also a little bit sloppy above 39, but I'm looking at this daily chart, and I'm just kind of seeing this as tails through 39 on these days. So to me, that's still pretty clear and clean as 39 is the actual level. So that's what made me like it. And again, generally I'm going to prefer the one that has the catalyst, and I didn't personally see the UAL upgrade, I saw the DAL upgrade. So I hope that helps. Scroll down. Yeah, it did. Goldman Sachs adds July Fed hike to forecast, raises peak call, raises terminal rate by 25 basis points to 550 to 575. Like, as much as I hate on Goldman, that makes sense to me. That actually makes sense to me. 25 basis point hikes, higher terminal rate, higher for longer. Oh, there's the UAL. I missed that. So DAL got upgraded by Evercore. UAL got upgraded by BNP. Okay, I missed that one. Somehow missed it in my research. What else, guys? From Robert here on the YouTube. Do you think we can expect another sell-off day tomorrow if Powell will repeat himself for his second day of testifying? I hope you're doing great. And Robert giving me the news when we work in here also. Thank you, sir. I don't know. I don't know. I think if we saw a second day of selling off, it would be more technical than anything else, and less about what he says. I don't see what else he can say on top of what he said already today that could be viewed as any worse, unless he specifically comes out and says 50 basis point hikes are back on the table. So I don't know. I personally think these daily chart technicals are very neutral here also, especially if you're looking at the SPY. So if I'm looking at, really been paying attention to this, 404 down to 393 area or so. If we're at 398.50 or so, we're like right in the midpoint of what's been a multi-week range right now. To me, that's as neutral as you can get. So if I'm looking at a market that's this neutral, if we have a flat open tomorrow, flip a coin. Higher or lower, flip a coin. I'm not going to have any conviction tomorrow morning at all. And that stinks. I like when I have really strong conviction. I hate when I have to tell you guys in the morning meeting that I think it's a less is more day. I always want to be able to say every day that that this is a day where we can go pedal to the metal and that there's a ton of opportunity. But the fact of the matter is, probably more sessions than not are defined by chop than trend. Probably more sessions than not are days where you want to be more passive than aggressive. But you really got to recognize those days when everything does line up to actually put your pedal to the metal, because that's when the money's there to be made. So, appreciate the question, Robert. Hope you're doing well. Anybody else have anything for today? Otherwise, it's going to be a short one, which is fine, but it seemed like there was a lot of action today, so... Okay, well, I guess I'll wrap it up then, if no one's got anything. So have a fantastic evening, everybody. I hope that you're all improving as traders. I hope you're all learning. I hope you're not getting discouraged by the chop that we've been having recently. We take it day by day, and even within this chop, I think we've been doing a pretty good job navigating things. So have a great night, and I'll see you all tomorrow.